How's it going, everyone? Welcome back. I hope you've all been able to have a nice week and a month of February. March is literally tomorrow, and just like that, we're 3 months into the year, or a fourth of the way through 2021. We just got to do this amount of time 3 more times, and that is it. I remember growing up, my dad would say the older you get, the quicker time passes you by, and as I get older, I can definitely see where he was coming from. I think it's just that the older you get, the busier you become. Your responsibilities increase, and overall you begin to have less and less time for yourself, or supposed to have less time for yourself, which has become normalized. At least in this modern age world of working, earning, and spending, right? All in that order and put on repeat. It takes a while to save money, and it's nearly as boring as watching grass grow. Therefore, in a way, I see why people do take out debt for present-day pleasures. But in doing so, you tend to bet against yourself in the future, setting yourself up for a rough patch. And although I don't like this option either, the alternative of waiting patiently saving is also a tough gig, but one I'm consciously sticking course with so far, and we'll see how it pans out as I continue to document this journey. Here we return for again another video. The journey has been fun so far, nearly at the 50 subscriber mark, which is awesome. And since we're here, I just got to say, do hit the like button. It does help. And do subscribe if you want to follow along on this journey of growing a dividend portfolio and or watching the progression of growing up this YouTube channel, as I'm constantly excited for what's in store. And like I continually say, I won't be stopping this anytime soon. So I remember it was just a few weeks ago, I was feeling the sense of burnout, working as a registered nurse in this COVID-19 pandemic of an endless season. However, it's so strange, as just as the COVID surge returned with a vengeance over these last few months, it now does appear to be disappearing, at least in my work environment, which tends to be a hotspot for infectious disease. I work in a correctional facility, and just like cruise ships and nursing homes, these tend to be hotspots. So if COVID-19 can appear and then disappear in this setting in particular, why not elsewhere? And just by keeping up with the news and the morale outside, the trend looks like it continues on the outside. The numbers have been going down, more people have been getting vaccinated. Everybody has their thoughts and opinions on this, and that's okay. But I'm hoping this will all lead to the road of things opening back up and things stabilizing, normalizing, and hopefully us getting a footing back to our normal daily routines of what it was before. So I'll take the good news or good pattern, still optimistic overall, and hopefully this continues for the sake of all of us. Now, switching subjects a bit, as you've noticed, this last week was not great for people's portfolios, mine definitely included. The old Red Sea has come again. As you'll see in a few moments, I did in fact make a deposit this last week, but it was practically wiped out. But despite this, I'll tell you why I'm not worried and why you shouldn't be either, especially as a dividend investor. A big part of dividend investing is the concept that you will never sell off portions of your portfolio for income or financial stability in the future. So in theory, any growth in terms of a dividend portfolio is a cherry on top, and it's nice to look at. Stock price gains are not as crucial as in a dividend portfolio. We don't solely rely on this for a successful portfolio return. Sure, it's sexy to see huge market gains, but it's not a be-all end-all. In a dividend portfolio, your only concerns are to keep track of a company's dividend yield and payout. I brought it up before that not a single one of my holdings, despite a 2020 horror story, cut or slashed their dividend this past year, or so far in 2021. If anything, they continue to increase their dividend. I would imagine that to be a sign of a resilient and stable company, one that I'm quite comfortable putting my hard-earned money into. Now, sure, there's a balancing point or a teetering effect to structuring a dividend portfolio, especially upfront. But once you've found a good point, and most importantly, a point you feel comfortable with in terms of your risk tolerance, you usually should be fine, as this style of investing isn't very hands-on, it's not quick-paced, it's not flashy, and it's overall a very or more conservative strategy. In dividend investing, the sooner you realize it's not about the gains necessarily or the increase in stock price, it's about passive income. The sooner you begin to save yourself the headaches, ego turns, and sleep that comes with watching the daily market move. Dividend investing for me is like watching grass grow. It's slow, but I know it'll keep growing as long as I keep watering it. And watering the grass isn't even that bad. You can buy sprinklers. And with that being said, we'll go ahead and jump into the portfolio review for this week. So here we are in the Jesse's Cash Flow portfolio. probably the most exciting thing to have happened this last week was crossing the $18,000 mark. And it's definitely exciting. We're inching closer and closer to that 20K mark. And I'm excited to just summarize my portfolio once we get there. But here we are, crossing the 18K mark. We have an all-time return of 16%. Before we were around 20%. So as you can see, the Red Sea has came in and it's made its presence known. But this still equates to a gain of $1,360. And even if we weren't in the green, that is totally okay, as my main focus is getting paid in dividends. But as long as I see green here, like I was saying earlier, it's a cherry on top, and it does help, and it does make you feel good. But this total market gain, it includes $178 all-time earned of dividends and $1,181 of market gain. And just so I could show you here the performance of this last week, which is what I'm referring to as the Red Sea, we could see that here's my deposit, but overall we were going down. And if you see it on the month chart, it's a little bit more noticeable. So I'm a little curious to see how the market continues to trend, especially going into this upcoming week. There's still optimism in the air, but even with that, there's some other things going on. So it'll be interesting to see how it all plays out. But if I take you back here to the 1 week mark, here's the Red Sea. And we did have some green in here actually, which is quite interesting. Energy was actually my worst holding for quite some time back in 2020. And so far it has actually been doing very well. And everybody has their opinion on oil. Industrials was also in the green for me, along with financials. And financials has been doing quite well overall. My ETF is also up, which is a pretty good portion of my portfolio. This one was getting its butt kicked also in 2020. And if you're curious to seeing exactly what it is or anything else that I'm holding, there's going to be a link to sharing my pie. As all you guys know, if you're familiar with M1 Finance, it'll be in the description box. Just go ahead and click on that and take a look and see what I'm holding, if it is that you are curious. And like I was saying earlier, this week was a lot of the Red Sea, and crossing the $18,000 mark was pretty much the only main excitement to have happened in my portfolio. And we're going to have times like that. Times it's going to be very exciting. We're going to be getting paid a lot in dividends. Other times we're not going to get paid anything. The market may turn red on us. It may go green. But at the end of the day, we got to stay focused on our goal, stay systematic to our plan, and just execute. Here it is on February 24th, our $500 deposit, which was greatly diminished this week by the Red Sea. And we do see a $1.11 snowball, which I will take any single day of the week. Like I always say, I will take it. Even if it was just 11 cents, I will take that too, because everything adds up. So that's going to be it for this week's video. I'm a little curious to see how the market reacts in this upcoming week. Like I was saying, 2K more to go to reach to that 20K milestone. And I'm excited. I can't foresee exactly when that's going to happen, but it's going to happen. And I'll be excited, and I'll be sharing it with you when it does. Stay safe out there. Enjoy this upcoming week. And hopefully you're able to relax and do something for yourself. This is a long game. Life is a long game. And work isn't always necessarily fun, but we got to do it, especially as we're building. And right now, I am building. So with that being said, guys, I will see you on next week's video. Peace.